Looking ahead to the trading week beginning June 8th, we're going to be assessing risk assets all week, starting earlier in the week. Despite some intraday volatility last week, the entire suite of risk assets finished the week positive, as did gold. The yield curve flattened with front-end yields rising by double digits while the long-end yield moved higher only by single digits. This movement suggests the market is increasingly pricing in fewer rate cuts in the near future. The relative strength in risk assets alongside a flattening yield curve, which is what happened last week, indicates that investors may be leaning into optimism around economic resilience. We'll be watching that as well as the CME Fed Watch Tool's reaction to this news. CPI is due out next week, and the market's expecting stronger numbers this month, both on a monthly and an annual basis compared to last month's prints. The implication of this uptick in inflation, if it materializes, is significant. It could reinforce concerns that recent disinflation trends have stalled. If core and headline CPI show upside surprises, it may signal that inflationary pressures are proving stickier than previously hoped. Again, it needs to be closely watched, as well as what the market does with that information, especially after the non-farm payrolls wages part was so strong. This coming week, we have a 3-year note auction, a 10-year note auction, and a 30-year bond auction, totaling $125 billion in total issuance. Next week, it will be somewhat quiet on the earnings front, with only 14 companies with market caps of over $1 billion or more reporting. These companies include Oracle, Adobe, SailPoint, GitLab, Casey's General Stores, Smuckers, and GameStop.